All right, what's going on YouTube? This is going to be the easiest liquidity sweep video you'll ever hear and you'll ever watch. This is going to be the fastest liquidity sweep video, and I'm going to break down liquidity sweeps as fast and easy as possible to make anybody understand it. So first thing we're going to do is, what is liquidity? Well, what is liquidity? Liquidity is liquidity is orders resting under lows and above highs. It is a way for us to reverse trend. Simple as that. Simple as that. I'm going to draw one out for you. Boom, bam, 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 bam. Right? These are our highs right here. These are our lows right there. Liquidity lies above highs and lies below lows. So if we're already in an uptrend like that, and we're already hitting these draws on liquidity, would it be smart to buy here for a chance to go up? No. What we'd have to wait for is we have to wait for a retrace to go up, and that allows us to have a proper liquidity sweep right there. Right there. Price eventually comes up, sweeps out this draw on liquidity, and then sends it down like that. It can also happen in the opposite direction. We can make a low. Price will come down. We'll sweep this draw on liquidity right here, and price will shoot up out of it right there. Right? Essentially, that is what liquidity is. Liquidity is not a confirmation confluence. I'll write that down. Make sure, if anybody's taking notes, liquidity is not a confirmation confluence. What do I mean by that? If we are in a solid uptrend right here, right? Highs, lows. If we are in a solid uptrend and we already take out these highs, it is not safe for us to immediately start buying out of it. We would have to wait for a retracement, then high. Then we can buy out of that. Why? Because liquidity is not a confirmation confluence. Liquidity is the ability to change price in a different direction. I'll show you what happens to too many traders that get eventually stopped out with this. Let me just get rid of all this real quick. All right, look. This is what happens to too many traders. Too many traders will see an uptrend like this. I'll draw it right here. Too many traders will see an uptrend. Boom, 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 boom. We start forming highs, start forming lows, and people start buying at the peak of this move, hoping that price would want to shoot up in that direction. Well, unfortunately, that's not how price action works. Price action is not going to shoot up immediately after all of those. I'll get into here and I'll show you guys why. So look, price action will not immediately shoot up after those because we got to not think like retail traders. Retail traders are traders who want to just long at the top of the position and then short at the bottom of each position. Not thinking like retail traders. Think like a market mover. What do I mean by this? Market movers can't move the market right here. They can't move the market right here. Where can they move the market? They can move the market on strong draws on liquidity and at the top and the bottom of each strong low. So I'll show you guys real world where this is happening. Look, this is a perfect example that I already have put up on the screen. All right. So what do? We're forming a downtrend. Boom. And then boom, drastic low right there. We trail up and then we start trailing down a lot further. So if we were to trade this and people are like, all right, well, we came down below this low right here. I'm going to enter in some buys into some long positions right there. They eventually get stopped out, right? Oh no, sorry. They enter into some shorts because they're like, all right, market's in a downtrend. We came below a low. We're going to enter in shorts. No. Why? Because we came up and we swept that drawn liquidity. And can we still short this? Yes. Can we still short this move? Yes. But why can't we short it? Because liquidity is not a confirmation confluence. Liquidity is the ability to change trend. You see that? That's a fair value gap. That fair value gap getting filled, that shows that this is not a short longer. This is now bullish price action. It is not bearish price action. I'll find one more example to show you guys. And the reason why I'm specifically on higher time frame is because those are where strong draws on liquidity lie, and that's where I personally look for my strong draws on liquidity. So what do we have here? Low, high, high, low. What does this low do? It wicks below this. This low comes down and we wick below this draw on liquidity right here. So what can we comfortably assume? We can comfortably assume that price wants to come up right there. Right? Price wants to come up and take out there. Now you might be wondering, Javesh, why didn't price want to come up and take out this draw on liquidity right here? Why did price not want to come out and take out that draw on liquidity? Well, I'll show you guys why. Because that is only one draw on liquidity right there that eventually got hit from this one. If you guys are understanding, we take out this high, so we start going down. We take out these lows, so we start going up. Right? What is this followed by? We have two lows right here, relative equal lows, two relative equal lows. Price come down, wicks below it. We come, break a structure, boom. Now we can long out of this. Right? Let's find one more example. Let's see. All right, here we go. Example right here. What do we have here? 1 hour high right there. What do we have to do to see price change trend? We have to see price sweep this draw on liquidity. What comes in right here? Price came in, we filled above it, and we started trailing down. And how do we know we're trailing down? Because we have an inverse fair value gap right there. We have the inverse fair value gap right there. So we can comfortably say, all right, I want to short it right there. And then I want to maybe target that draw on liquidity right here. Because what are draws on liquidity? And where do they lie? Underneath highs and underneath lows. Draw on liquidity right there. So what can we comfortably come down to do? We can comfortably come down and we can target it right there. And as you can see, price came in and we wicked into it and we won that trade. What we did not do is we did not enter buys right here, because what are we going to target? I mean, let's look. What are we going to target? There's absolutely nothing to target right here. There's nothing to target. So why us as retail traders, why would we want to press buy at the peak of that move? We wouldn't. We would rather look for bias to the downside because we swept a strong draw on liquidity. That's what initially builds our strategy. What builds our strategy is strong draws on liquidity. So where do I look for strong draws on liquidity? I look for strong draws on liquidity underneath highs, or above highs and underneath lows, specifically 1 hour. The 1 hour time frame is full of massive draws on liquidity, and there's draws on liquidity everywhere. Look right there, remember? Boom. I'm sorry. Boom, draw on liquidity right here. Equal lows, boom, draw on liquidity. We started moving up. Look, bam, equal highs. What do? We started trailing down right there. Let's find some more, guys. Let's find some more. Come on, look right here. Low right there. Boom, right there. What do? Sweep out that draw on liquidity. What did that cause us to? Move up a lot higher. That's essentially all I'm saying, guys. Liquidity is the easiest concept to learn in all of trading. Liquidity lies above highs and lies below lows. It is an area for the market movers to reverse price. So if we want to think like a market mover, because we don't want to think like retail traders, we're better than everybody else. We don't want to think like the average person trading this. Average person trading is going to be like, oh, we're in a crazy uptrend. All right, I'm going to buy, boom, boom, stopped out. Right? Oh, no, we're in a downtrend. Boom, I'm going to sell. Boom, stopped out. Recent draw on liquidity. That high right there. Boom, stopped out. Right? We don't want to think like retail traders. We want to think like the market movers. People that are able to move the market. What do they want to do? They want to find a significant high or a significant low for them to come up, get their orders filled, and then trail down to the downside. I cannot break this down easier enough, guys. Liquidity rests above highs, below lows. I mean, just look at that right there. Above highs. So we come up, we sweep these highs right here. Boom, go lower. Right? We come down, we sweep this high up here. Boom, go lower. Liquidity is that simple. Liquidity is that simple. It's that easy is that easy to learn. For anybody taking notes, these are the notes right here. This is the most simplest liquidity concept video you'll ever watch. I promise you, we cannot overcomplicate this enough. I urge you to go try on your own, guys. And soon we'll come out with a more advanced liquidity concept where we come into session highs, session lows. We come into more small minute draws on liquidity. We come into 5-minute draws on liquidity, 1-minute draws on liquidity, low resistance liquidity, and that will all be in the next video. For now, this is the most simplest video we have. This will build our strategy, and this will determine how we choose the direction for price one to go. Thank you for watching. Peace and love always, and I'll catch you in the next one.